Welcome back, everyone. Hope all is well with you. We're back. This is your first time here. I'm Blair Armstrong of Team Armstrong Coldwell Banker, located in beautiful Indian Wells, California. I am a global luxury specialist in residential real estate here in the Coachella Valley, and I'm also a global luxury ambassador for Coldwell Banker. Just a short amount of time, I'm going to join my good friend and colleague, Sean LaRue of Sean LaRue Homes, and we're going to talk about stuff like with loans and stuff, which would be really cool. So last week we talked about VA loans. So if you missed that episode, you definitely go to our YouTube channels and check that out. This week we're going to talk about FHA loans. So what are closing costs? What are credits have to be? What do we have to do for a down payment? Certain things like that. So strap in. We're just about to go ahead and join, as I said, my good friend and colleague, Sean LaRue Homes. But before we get there, I need you to do one big favor. We do not have any advertisers and we do not have any sponsors. So everything we do here is just paid out of our own pocket to get this message out to you. So we ask for one thing. We'd love for you to use us. So if you want to be residential real estate or with a loan. But if that's not the case, do us a favor. Hit that subscribe button. And when you're done with that, if you feel this information is good, go ahead and share this with your friends or your family or whoever you may think really needs to hear this message today, and today again about FHA loans. So that's it for now. Right now, again, strap in. We're going to have some great information about FHA loans today. We hope that you enjoy it. Leave us a comment below and let us know what your thoughts are. Okay, let's join my good friend Sean LaRue. All right. Good morning, good afternoon, good evening, wherever you may be. We're back for week number 3 with Sean LaRue of Sean LaRue Home Loans. I am Blair Armstrong, located in beautiful Indian Wells, California. Blair Armstrong of Team Armstrong Coldwell Banker, as you see right behind me. And then Sean LaRue of Sean LaRue Loans, most likely located in beautiful Arizona today. Are you hot or are you cold today?
I've got the AC blowing in the office. It's a cool 85 degrees. It was actually raining a little bit earlier this week.
Oh man.
I heard you guys have had some dust storms out there this last week. Don't miss that. But
no, man, it's just you wash your car and literally you come back out a couple of minutes later and it's just it's snowing, dust. So we're in need of a little bit of rain. We had a good rainfall. Obviously the hills were green for such a long time with all the rain that we had during the winter. But we could use a little bit to knock it down, a little bit for the hurricane last August changed everything in here with all the silt that got washed down from the mountains. I mean, still gorgeous out here. Still got great mountain views. There's certain days that the wind blows, the dust kicks up, and it's weird for a couple hours, and then you're fine. So,
yeah, back in paradise.
Back in paradise. So, well, last week, brother, we talked about VA loans. We're actually coming into right now is Memorial Day to honor all of our veterans, all of our first responders. Really, is what it's come down. What it's come to, but. What we're also, I think that's, what I really want to hit on today, and we've talked about this back and forth over the last couple of weeks, is first-time home buyers and the FHA loan. It just seems, I feel like there's a lot of people that you don't know because I haven't told you this yet, but there's some people that this is their first time purchasing a house. They're not sure if I should continue renting. The rates, everyone tells me their rates are really high. I'm never going to be able to afford a home. I'm not going to be afford a down payment. As we talked about last week, I think media in general or articles you read, depending on where your eyes are located, are scaring the heck out of anybody trying to buy a home right now. So and I won't say encourage, but let's just know there's a lifeline for the first time home buyers. So FHA loans. I'm a first-time home buyer.
Yeah, Federal Housing Administration.
Okay.
They're great government-insured programs, great for first-time buyers. They're aggressive on the approvals. You can get in with low FICO scores and a minimum 3.5% down. And we'll talk about this on another episode, I'm sure, but you can combine those with some down payment assistance programs.
Okay.
And awesome opportunities for that. But yeah, just focusing on a normal FHA loan today. Um, and I'm getting hung up on FHA. Is that authority or administration? Whatever it is, another acronym for government insured loans.
Yeah.
Um, but yeah, it's the FICO scores are extremely flexible, and we'll kind of get into that. But you know, um,
Let's
it,
let's
it
let's do that, man. Let's just kind of hold that horse right there for a second and let's talk
yeah,
about that because last week we talked about with the VA loans how let's kind of help your credit along. Let's get help you clean up some stuff like that. If I come in, which was we're just going to talk about a number we talked about last week at 620, am I going
yeah.
to be able to qualify for an FHA loan, or do I need to go through the assistance that you talked about last week with the VA loans of helping you clean it up a little bit? Where's my like, hey, you need to be at least here for
Yeah.
us to even consider it, and if you are below that, then let's talk to each other and help that out.
So I'll actually make it really easy. If you have a 680 FICO score or lower, you're probably going to want to lean into the FHA program.
Okay.
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 Um, the FHA loans will go down to a 550 with some lenders, 580s, usually the cutoff. Um, but when your FICO scores drop below about a 600, there's going to be some pricing hits. But yeah, 620, that'll get you a great deal with minimum down.
Okay. And if I'm hovering between that, it's obviously 550. You said there's a couple people that might do that. 580 is kind of sees that is the bottom portion of it, is where it starts and working way up.
Yeah.
Is there a difference in rate if I'm at a 580 compared to a 620, or are they all the same between a 580 and a 620?
Yeah, there are actually. So in every 20-point increment, 580 to 599, 600 to 620, there's
Okay.
certain what's called loan level price adjustments
Okay.
to the pricing. And so you're going to see it get a little bit more expensive based on how much down, your loan to value, and your FICO score. And so that can make a difference when you're comparing rates online. And you think, I'm looking for a product, it should be X, but everything is totally dependent on how you qualify and a bunch of
Mhm.
different factors that you may not even consider. So that's why we really, want to look at your situation specifically because it's totally tailored to you.
Okay. And being said, so let's go back to that again. We're going to hover on this to really help out these guys that have been kind of maybe given some false information or not clearing some information. That 580 again to 620, or to that 600 and then 600 to 620 might be a good opportunity. You can check it out. You can go to Experian.com, get a free credit, kind of a ballpark of where you're supposed to be. Obviously, you're going to do one in more detail, but I'm hovering around that 580. Let's use that as worst case scenario. How long would it take typically when you're helping people clean up their credit a little bit and get a better rate? How long does it take to get from a 580 to, let's say, a 600?
You know, I'm glad you brought that up because it's not just about the points, it's also about the credit history and what's
Okay.
going on with it. Okay. So you could have a 630 FICO score, but if you have a car repo or you're not meeting your obligations, you might not have that score. But if for some reason you're in an upper score, but you have, collections or like a car repo on your credit, it's possible that you still might not be able to qualify.
Okay.
If you just have a bunch of different credit cards, and I've seen a laundry list of credit card debt, it really depends on your debt utilization. Basically, how much is your balance compared to the limit?
Hmm.
And so if we have a little bit of money in order to pay down those credit cards, I can run what's called a rescore model, and I've been able to jump scores up from a 580 up to a 690
Oh,
if
wow.
we're applying the money correctly to the right accounts. And it's very, very specific. You would think that paying off the credit cards to a
Hmm.
zero balance would
Hmm.
actually hit your score and jump you higher, but that's not always the case. It really depends on multiple factors, how many credit cards you have, what those limits are,
Hmm.
and we really want to get that dialed in. So pay very specific attention to the loan officer's details because we're literally just copying and pasting it into, your credit plan. And you think you might be doing better by applying an extra $200 to another card, but the sweet spot might not be a zero
Hmm.
balance. It might be a $99 balance. So it's all depending on what else is going on, how many accounts we have.
Yeah.
And so I've had a lot of success with credit rescores in the past. I, I just helped a VA borrower who had no FICO score get a score by doing two different things.
Hmm.
And so, he came back from no score, and in 2 months he had, I think it was a 720.
Wow. And I think
Yeah,
that's important too, because I think what you said there is really important to understand because that's what we've been taught is like, okay, if I'm going to buy a house, I need to clean up my credit, so I need to pay off all my credit cards, or I have all this credit card debt. Sometimes credit card debt, as you just said, is not a bad thing. It's actually an enhancement, not a detriment, which we have been taught no different. Now everything's different. So what Sean's doing is like, okay, let's keep a couple credit cards open and let's pay off these ones. So
yeah,
with with where we are with real estate, especially for our first time home buyers, and kind of in this, probably I would say at our $500,000 or below price range, probably a little bit lower than that. But I'm just kind of saying that's typically where these guys are looking right now. I wouldn't be in this panic mode that I have to go out tomorrow, but I would be in a panic mode. But let's start talking with Sean now or a trusted advisor. Maybe it's a different, as we've always said to it. We would love, we do these podcasts. We would love for us to use this because we don't get advertising dollars or sponsors and stuff like that. But that's not what I'm saying is if you don't want to use us, find a loan officer that can help you work through that stuff. If your loan officer doesn't do that, obviously you can reach out to Sean and have
yeah.
him help you out and work on it. I mean, that's the premise of this. We want to be a resource for you. There's a lot of guys out there, not saying everyone, but there's a lot of guys out there. They're not going to take you time to help out and like, go do this, this, and this, and this, and this, and then call me when you're done. It's not going to help you out at all. So
Right.
it's a very intimidating thing in a roundabout way to buy your first home or apply for your first loan, especially at this magnitude. You may have done something with a car, but this is a whole different thing. So I
Right.
know this is a little bit long winded. However, if you're wondering where you stand, start the process now, even if you're not thinking about buying a house for another 6, 7, 8 months. At least you kind of know where you stand, and it'll help you look like, okay, this is what I can afford, and I can start dialing to it. So if you talk to somebody like me, who's on the residential real estate side, they're like, okay, where you're at, how much as of right now can you get a loan for, and we can start piecing those things together. So this
Well,
is
it,
a
it, it
yeah.
really
Go ahead.
depends. Sorry for cutting you off.
No, go ahead.
It really depends too on how you're applying those dollars because, like I
Mm-hmm.
just said with the rescores, you need money for your down payment and your closing costs. So let's try to hang on to as much of that cash as possible so that we're applying it correctly. And depending on your reported and taxable income, um, even my own family members were like, "Hey, I don't qualify. I can't afford this." And sometimes it's that conservative mentality that has actually put you in a better position than you could even think of
Mm-hmm.
that you've already got the green light because you have the right mindset, you're being conservative, you're not going out spending money
Mm-hmm.
on dinners, you're cooking at home, you're actively trying to pay down your debt. But let's apply those dollars very tactically to make sure that maybe you need the $5,000 towards the down payment, and you report plenty of income, and a 250 a month payment on your credit card isn't necessarily as important as keeping that $5,000 for the down payment.
Mm-hmm.
And so
Mm-hmm.
it I can't stress this enough. It really depends on what's going on in your life and what your goals are so that we can navigate all these little nuances.
Yeah, that was really good. If you guys missed that, rewind that for a second because there was a lot of good golden nuggets in there. You said something too that stuck out in my mind. Obviously, there's a down payment, right?
Yep.
So that could be any. What's typical down payment of FHA right now?
FHA minimum down is 3.5%, and the FHA loan limit in Riverside right now is 644.
Okay,
So we're looking at 644,000. You can get in with 3.5% down. So I mean that's the max. So on 644, minimum down's 22,540.
okay,
You add that back to the 644 loan amount. That means you can purchase a property up to $665,000
okay.
with that amount of money down. Now it changes the number a little bit, okay?
Sure.
But that gets us a ballpark. But let's just say I was just working with a client. They're looking at a $500,000 property. 3.5% down is 17,500.
Okay.
Now, FHA also allows you to get a gift from a family member. So it doesn't have to be all of your own money as
Mm-hmm.
long as we can paper trail the gift. Um, there are opportunities that we could put our heads together with our family in order to leverage other resources, or maybe we're tapping into a 401k. If you've been at the same company long enough, maybe it's smart money to borrow from your 401k because you can pay yourself back at a market interest rate. You're
Mm-hmm.
borrowing from yourself, non-taxable money. You're able to pay yourself back in non-taxable money. Typically, they'll take it out of your check every 2 weeks,
Mm-hmm.
and you're able to put yourself on a similar 30-year fixed term to meet your mortgage. And for primary residence buyers, work with your 401k or I'll help step you through that.
Mm-hmm.
But it's an awesome way of leveraging your own money and paying yourself back.
So good. This is so good. So is this helping, guys? So let us know in comments on what you thought about that. So when we have this, Sean's going to have it on his YouTube channel. We'll have it on our YouTube channel. Obviously, we'll put this out through social media, but let us know kind of what, if there's some questions that you still have, let us know in comments on our YouTube channel so we can respond to you. But hopefully that helped out a lot. So now we kind of answered, flexible credit stuff. We talked about the down payment. Next biggest thing that you talked about on there is closing costs. What
Closing
is it going to cost?
costs.
It's like, where are these? Like, I thought I could just go ahead and give you like $10,000 and I could buy a house and I don't have to worry anything about. So now we have, flexible credit. I said, you just talked about down payment, which is 3.5%, which you could really help us out a lot. $500,000 home right now is a really good home, by the way. Um, there's some, there's some good deals out there right now.
There are.
Anyway, with this FHA, just talk to us about closing costs with FHA. What is
Yeah.
that?
So your closing costs are going to include all of the lender fees, appraisals, title and escrow, recording fees, inspections, processing, underwriting. That's the lender fees. And so those base fees, your home inspection, a
Mm-hmm.
termite report, if you're doing one, it's going to run about $5,000 to $5,500.
Okay.
Okay. And then you have what's called reoccurring closing costs. So with the FHA, we're going to need to pay the first year's worth of homeowner's insurance or your hazard insurance that protects you as the homeowner for theft and fire damage. Um, if anything should happen to the property while you own it, we prepay that at closing for the
Mm-hmm.
first 12 months. Okay. And then with these government loans, they also want you to do an impound account or an escrow account.
Mm-hmm.
So part of your payment is going to go to principal and interest.
Mm-hmm.
The rest of your payment is going to go towards your taxes, insurance, and mortgage insurance. So that's all going to be one payment to the bank. It's pretty common in the Palm Springs, Coachella Valley area to be in an HOA. So
Mm-hmm.
you'll always pay your HOA fee separately
Mm-hmm.
to the HOA. So that's not going to be all inclusive to the bank. You're going to pay the HOA separately like you would your utilities. Um, and so those reoccurring closing costs, depending on the time of year, we're either going to impound like 8 months of taxes or 2 months of taxes.
Mm-hmm.
So it just depends on what time of the month or time of the year we're closing,
Mm-hmm.
and we'll get you on the right payment schedule so that the bank will collect the money up front at closing.
Mm-hmm.
You're going to pay into it every month. And then as the property tax bills come out in what they're doing in April and
Something like
December,
that. Yeah.
the bank's going to make the payment on your behalf, and you're going to get a bill from the county stating what's owed. And then I always get the phone call, hey, I got a bill. You said it was included. You'll always get
Just
the
gonna say that.
bill.
Yeah.
Okay. You'll always get the bill. But the bank's going to pay that out of your escrow balance. So when you get your mortgage statement, you'll check it out. You'll see your payment amount, principal, interest, your escrow balance. That escrow balance is the amount of money the bank's holding on to. That's your money.
Mm-hmm.
It's a savings account, and they pay your insurance renewals out of that once a year, and then they'll pay your property taxes semi-annually every 6 months in April and
Yeah.
December.
I'm so glad that you said that. So when I had an FHA loan, I was kind of the same case. Like, wait a minute, you said this is I had my insurance and all this stuff, and now I'm getting these bills. Like, I have to pay this. What have I been paying to? Just look in your
Right.
escrow. We can go over that. We're not going to peel back that onion to it. Just know
Yeah.
that what Sean just said is absolutely true. It's basically a little escrow account. It will be on your statement that this money's going here, this money's going to here. You'll see it, and then all of a sudden one day you look at your statement and it's zero. It's because
Right.
everything has been paid. So don't freak out when you get it. It's really for your record. So when you give it to your bookkeeper or to your CPA or whatever it's going to do your taxes, or maybe you're just doing your taxes by yourself, you just have all that information of where all that money went. So that's it.
Yeah.
But it's good too, because it does freak you out the first time. Yeah, like, whoa, wait a
Always.
minute. Wait a
Always.
minute. Phone calls are
Yeah.
going out and stressing out. Like, I don't prepare for this. They're asking me for $5,000 or $6,000, whatever it is for property taxes. So anyway, so one of the joys that I just learned about this, and I thought this was really cool. Okay, I have my house. So I have a 30-year FHA or a 15-year FHA. I think, is it 15 or 30 still?
Yeah, you could
Are
do
they?
a 15 or a 30, but we're probably going to go for minimum payments, so we'll go for the longer term.
So after 15 years or 10 years or whatever it is, like, you know what, I've done pretty well. I'm going to go ahead and sell my home. And it is a good first time home buyer home. You just told me right before we got on this is it true that these FHA loans are assumable? That someone could take
The F
over?
Yeah, FHA loans are assumable, and basically you're not applying for a new loan from somebody like me that's originating a new loan. You have to go back to the servicer or whoever the seller's currently making their payment to,
Mm-hmm.
and you got to work with them in order to qualify for that loan. And you're basically assuming their current loan with the remaining term, their current payment, and the current rate in order to take that over. And so I'd say for the last 18 months to 24 months, it's been very popular, and people have been trying to navigate this because, I mean, those low rates, everybody wants to hang on to them. And if you're a seller trying to make a transition, that's a bit of an asset or a
Mm-hmm.
value add for a buyer. And so that takes the liability away from the seller. They can essentially get that off their credit, and then the new liability is with the new buyer.
So help me if I'm thinking about this right. So let's just say that I got my FHA loan at 6.5%,
Yep.
and this new person comes in and buys my house, and rates are at 7%. Are
Hmm.
you saying that that new person can go ahead and assume a 6.5%?
Correct.
Wow,
Yeah.
that's that is a winner chicken dinner right there if you ever heard one.
Right.
So, and it doesn't happen all the time. It's an option
No,
that you
and
can
part of
do.
the process is still providing all the same paperwork
Mm-hmm.
to the assuming bank,
Mm-hmm.
um, like you would a normal, loan officer or any other bank. You're going to have to provide your tax returns, pay stubs, ID, bank statements, and all of it. I mean, the qualification of it is exactly the same. It's just,
Hmm.
who you're working with in order to get that approved.
Yeah. So some good stuff there. And I think that's really what the big thing is. I think, with over the last couple of weeks, especially today, is do not be discouraged about, again, what the media is telling you, and the rates are so high and it's becoming unaffordable. It's definitely a scare tactic. Trust me, if you've heard enough people out there, especially people that are more seasoned like me, the age of 55, wasn't too long ago that we were spending 13 to 14%. There's guys that spend 19% on home loans. So even though 7% is high, you have to think about it this way. Typical credit card right now that you're paying interest on is probably 23 to 26%, sometimes higher.
Right.
So 7% ain't that bad. So
Rates were 7-8% when I got in the business in 2005.
yeah,
So,
yeah.
I'm kind of dating myself a little bit, but um, we've got, I mean, it's, we've gotten very used to
Hmm.
extremely low spoiled interest rates and I mean, hey, rates are at the best they've been in the last 2 months.
Hmm.
We're hovering in the high sixes, low sevens, depending on the program. And FHA has some of the best and lowest rates in the country.
Yeah,
They're neck and neck with VA.
yeah. So definitely right now, you can go ahead and fact check me on this if you want to. And this is not for Sean. This is for our viewers out there. Is right now is a really good time to start considering doing this. Even as I said to you a couple of 6 months away, just some crazy chance, and there's probably a very good chance that this happens, that the rates drop. Um, Prices of homes are probably going to go up because we do not have enough inventory realistically anywhere in the United States. We're at a lack of inventory everywhere. And so when there's a supply and demand issue and the rates go down, and all of a sudden we have 3, 4, 5 offers per property, and we're starting to see that happen again. So if you are even thinking about purchasing again a couple months down the road and it's time to go ahead and get some help cleaning up your credit, please reach out to first and foremost Sean. And or if you don't want to use him, I said go ahead and use a mortgage officer of your choice. But as you said, Sean has been a great resource for us over the last couple of weeks, and that's why we do this stuff. We're hoping that you use us when it comes down to not only getting a home loan, but also to when you're purchasing a home. And Sean is in how many different states?
You're like reading my mind today. I can operate in 40 states, so chances
Okay.
are pretty good that I can help out. And if I can't help you in your particular state, maybe I've got somebody in your market that I can refer you to. So
Yeah.
again, we're here as a resource to
Mhm.
get you to the finish line.
Yeah. And then too, if you're out there, so if you see this and you are looking to buy a home and you are in a different state, remember, it's a reason why we have collaborated or used Coldwell Banker as an affiliate of ours of Team Armstrong Coldwell Bankers. We're in 43 different countries. So the chance I know somebody in a different state as well that can help you buy the house. So once you go through
Yeah,
Sean, and you come to me and say, hey, we're looking for a realtor, even if you're not in the Coachella Valley, reach out to us and we'll get you appointed to someone. So some good stuff, man. Any final thoughts
absolutely.
for you?
Just always great to see you. You bring
Yeah.
great energy. I appreciate your referrals as well because I'm hearing that you're actually accountable to what you say you're doing. You're in the gym every morning at 5 a.m. and you're
Yeah.
amazing
Yeah.
and yeah, you're crushing it, dude.
Yeah. I
So
appreciate it, man. Yeah. I get in there so I don't hurt anybody else. I
get
get in
that,
there,
beat
get all
yourself
my
up so you're not
yeah.
touching other
Yeah.
people. Yeah.
It's like, you want to fight? I don't have enough in me anymore. It's done.
Yeah.
All
Yeah.
right,
It's
guys. Thank you. Thank you so much for staying with us. This is again week two. This is actually week three of this. This week is obviously FHA loans. Last week we talked about VA loans. Week one, I'm a little too seasoned to remember what we talked about, but it was some good stuff in there. So go back and check that out as well. Stay with us. We record every Wednesday. Once we get put some sound to some stuff and get it out to YouTube, I will be out there, but I'll definitely be through our social media channels. You can Sean Loans, Instagram, is that right?
Yep, Sean LaRue Home Loans on
Okay.
most channels, and SeanLoans.com if you'd like
Okay.
to apply.
You see any of this stuff that's behind me, Team Armstrong Coldwell Banker, Google me. You'll find me pretty quick. If you have any questions regarding real estate, we can help you with that too. So, again, guys, that's it for this week. We appreciate you. Thank you for all your support. If you haven't done so yet, hit our subscribe button on our YouTube channels. So when this information does get uploaded, you can be notified right away. But until we talk to each other again, stay safe. But most of all, God bless, guys. Have a great day.